What is going on, my friends? Ryan Williams here, back with another one. And if you saw my last video, you'll remember I recently sold out of my Campbell Soup position, ticker symbol CPB, and I was kind of on the fence regarding how I wanted to reinvest those funds. However, guys, I have since made up my mind, and in doing so have added a brand new position to my portfolio, which I will be revealing to you today. In this video, I'll be sharing which dividend stock I picked up, and we'll break down exactly why I thought it was a good fit for my portfolio. And then later on in this video, I'll be going through a weekly portfolio update, which, by the way, guys, I went on a huge shopping spree with my Campbell Soup funds and added to like 3 or 4 different positions in my portfolio. So be sure to stick around until the very end so you can see all of the different stocks I picked up. Anyway, before we get rocking and rolling, if you guys love adding new dividend stocks, go ahead and give this video a big thumbs up. Also, if you're interested in learning more about dividend stocks, then I'd ask you to consider subscribing to my channel. Every single week, I'm putting out 2 videos, which usually consist of different analyses and updates. So if that's something you're interested in, then go ahead and hit that subscribe button for me. I would love to have each and every one of you guys follow me along on my dividend investing journey. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, my friends, it is time for the big reveal. The newest addition to my portfolio is Snap-on, ticker symbol SNA. And in case you've never heard of Snap-on, they are a company in the industrial sector, and they've actually been around for a pretty long time, and they make tools and equipment for a wide range of industries. And in their own words, Snap-on makes work easier for serious professionals in critical industries around the world, providing unique productivity solutions including tools, equipment, diagnostics, repair information, and system solutions. In the automotive garage and beyond, the legendary Snap-on brand conveys a badge of professionalism, delivering confidence to those performing critical tasks where second best is not an option. And like I said a moment ago, guys, Snap-on has been around for a long time, since like the 1920s, I believe. And as I mentioned too, they make a lot of products for a wide range of industries. And if we go over to their website, we can go through all of the different industries that Snap-on is involved in, starting with the automotive industry here, which really is their bread and butter. They first got their kicks making tools for the automotive industry, repairing cars and stuff like that. And still to this day, that is a huge component of what they do. Scrolling down, they're also in the aviation and aerospace industry, which, as I'm sure you can imagine, will require a handy set of tools for sure. They're also in the collision, which kind of goes along with the automotive industry, like automotive repair, right? Continuing on, Snap-on also makes tools and equipment for the construction and agriculture industry. So they'll make tools to help repair tractors and all that jazz. And then keep going down, we can see that they're also involved in electronics, which is pretty cool. Scrolling down even more, heavy-duty trucks and fleets, you'll definitely need a specific set of tools for those bad boys, and Snap-on has got you covered, definitely. And then going down the line, guys, they're also involved in manufacturing, medical device manufacturing, which actually is something I was not aware of till I started diving in deep to this company. Metal cutting, you'll definitely need a reliable set of tools to cut metal. Scrolling down, oil and gas, you'll definitely need some good tools to take care of that. Power generation, we've got these guys standing on a windmill right there, which is good as we move into the future as green energy becomes more prevalent. Things like solar panels and windmills, like what we see right here, will need a good set of tools to make sure they're staying operational. They're also involved in the railroad industry. Schools and students right here, this is actually one thing that I think is very cool about Snap-on. They partner with a lot of trade schools and specialized schools, which is great because the students that go to these, they'll start using Snap-on products right off the bat. And then later on post-school, as they develop their careers, hopefully they'll want to use the same set of tools that they were using when they were learning the craft, you know what I mean? So as you guys saw, Snap-on has their hand in so many different things. And moving on to this screenshot right here, this shows us a breakdown of all the different ways that they generate revenue. And as you can see, they operate in 4 different segments. The first of which being the Snap-on Tools Group, which makes up about 37% of their revenue. And the screenshot's from 2019, so these numbers might have fluctuated a little bit since then. But anyway, the second segment they operate in is Repair Systems and Information Group, which makes up about 28% of their total revenue. Moving on to the third segment, we have Commercial and Industrial, which makes up another 28% of their revenue. And then the last segment they operate in is Financial Services, which is actually pretty cool. They offer financing on their products because they can be expensive. This makes up 7% of their revenue. And sticking to this topic for just a moment, guys, Snap-on, from my understanding, makes very high quality tools, but they're not known for being the cheapest ones. From my understanding, you'll have to pay pay a pretty penny to get some Snap-on tools. But people seem to love them. Like once they have them, they really like them. And like I said, guys, they've been around for about a century now. And in that time, they've developed a really strong brand and also have a reputation for creating high quality products, which is something that I really like about Snap-on. And considering what we read earlier about delivering confidence to those performing critical tasks where second best is not an option, I would imagine that certain Snap-on customers would need to have some serious trust in the tools that they're using, or else the consequences, if they should fail, could be pretty bad. Think about some of the industries they're involved in, like mining, oil and gas, even power generation perhaps. Working in these industries can come with a certain level of danger, which means that having the right tools and the right equipment is vital. And if you guys wanted to learn a little bit more about Snap-on, in the description of this video, I've included a link to their investor fact sheet, which has a ton of great information and some stats on this company that I think would be a pretty good place to start if you were looking to dive a little bit deeper into Snap-on. Anyway, guys, going back to the screen and getting into some of the numbers, we'll start by taking a look into Snap-on share price performance. And as you guys can see, in the last year, they're up almost 20%, which is not too bad. In the last 6 months, they're actually down 6%. In the last month, they're up about 2.5%, which is pretty nice. And then just in the last 5 days, in the last week, they've actually come down another almost 5%. So Snap-on is slowly but surely making its way down in share price. But to be honest with you guys, there doesn't seem to be too crazy of a discount with Snap-on. That's one of the things that I was a little bit unsure about when I bought into this company. I don't think the share price right now is too bad, but I definitely think there is still room for it to come down a little bit. But my average cost per share is really not too bad. I think I'm sitting at about the $213 per share range. So as you guys can see, I'm currently at a loss with this company, which is good. I can, average my way down. But overall, guys, I do still think Snap-on has some room to come down in share price. And if we jump over to the valuation page, we'll dive into this a little bit deeper. Starting with the PE ratio, guys, it's not too terrible, 14.5 basically, which is almost 30% lower than the sector median and is about 1% lower than the company's 5-year average. So that is good to see. And then scrolling down, price to book, forward price to book is 2.7, which is just barely lower than the sector median. It's like right in line with the sector median price to book. And then the forward price to cash flow, guys, is 14.05, but it is down 7% compared to the sector median, so it is a little bit cheaper in that regard. And then all across the board, guys, Seeking Alpha gives the valuation for Snap-on a B-, which isn't terrible. Now, jumping over to the financials page, guys, there are a couple things I wanted to go through with you. Starting here on the income statement, once it loads, we are going to start with the total revenues. Pulling up this chart right here, you can see that it is trending upward. Okay, ever so slightly. It looks like from 2017 to basically now, the revenue's not done too great, but it really jumped up in the trailing 12 months. So it's making its way back up there, which is great. And then furthermore, scrolling down a little bit more, guys, we're going to take a look at the payout ratio. And as you can see, they're contributing about 1/3 of their free cash flow to the dividend on a consistent basis. All right, guys, now over here on the balance sheet, we can see that the cash on hand really jumped up for Snap-on here in 2021. And in their last report, which I think came out in November, if I'm remembering correctly, it's still pretty high, $735 million in cash and short-term investments, pretty liquid there. But scrolling down, guys, comparing that to their total debt, which is about 1.25 billion, they'll be able to knock out a lot of that with the cash they have on hand, and the net debt left over will be just above 500 million. But like we'll see in just a moment, they've got more than enough free cash flow to cover the rest of this net debt right here. I think they could pay that off in like 1 year if they wanted to, so that's great. Now looking at the shares outstanding right here, guys, we can see that this is trending downward. Slowly but surely, they're buying back shares and creating more shareholder value there. And they actually just approved another $500 million share buyback, which you can see on the screen right here. And in an article on businesswire.com, which I'll actually link in the description of this video, the CEO Nick Pinchuk said the dividend increase and the new share repurchase program demonstrate our steadfast commitment to create long-term value for our shareholders and our ongoing belief that we're well positioned for the future. He goes on to say the 12th consecutive annual dividend increase confirms the resilience and strength of our business, as evidenced by our payment of consecutive quarterly cash dividends without interruption or reduction since 1939, even during times of substantial turbulence. Our strong financial position and robust cash generation enables both our return of capital to shareholders and our support of ongoing strategic investment, organically and through acquisitions, along our defined runways for growth and improvement. It's great to hear that they're confident in the business, guys, and that leads me to the next point. One of my favorite things about this company, the dividend. So we are going to jump over to the dividend page right here and get into some of the dividend stats. Now, starting with the forward dividend yield, that is sitting at 2.71%. A little bit on the lower end, but that's okay, guys, because they've got some other great things going for them as it pertains to the dividend. Moving on to the payout payout ratio, that's currently sitting at just under 40%, which is relatively low. Moving on to the 5-year growth rate, that is sitting at 15.01%, which may not last forever, but even if they were able to continue growing the dividend by 8%, that's something I'd be happy with. And that is something that I was actually looking for that I did not have in Campbell's Soup, which was one of the reasons I wanted to get out of that company. And reinvesting into Snap-on, although I'll have a lower starting yield because Campbell's Soup is in the 3% dividend range, I will have a lot more dividend growth, which I think is a fair trade. And then Snap-on over Campbell's Soup also has more dividend growth history to offer. They have a dividend growth history of 12 consecutive years. And as we read just a moment ago, they have been paying their dividends without any interruption since 1939. And I'll tell you what, guys, the company is very proud with themselves for being able to keep up those dividend payments for that long, because as you can see on the screen, they refer to it as a claim few public companies can make. They say that in the first sentence there on the screen. This screenshot goes on to say, Snap-on's dividend is an important component of total return to shareholders and an essential part of our capital allocation strategy. In November 2020, the board of directors approved a 13.9% increase in our dividend, underscoring our commitment to create long-term value for our shareholders, which is great. And that's pretty much all I have for you guys today on Snap-on. I'm very excited to now be invested in this company. I've been watching it for a little while. It's been sitting on my watch list. For a while, I was kind of deciding between Snap-on or Stanley Black & Decker, which is SWK, and obviously, ultimately, I decided to go with Snap-on. I think I made a good move. I am feeling very good about this investment and having this in my portfolio. Prior to selling out of Campbell's, guys, I had 4 different consumer staples stocks in my portfolio, which there's nothing wrong with that. I really like consumer staples. I'm a big fan of that sector. But sector-wide and also portfolio-wide, Campbell's was the weakest link. So I'm really glad I sold out of it and bought into something that, although it has a lower starting dividend yield, it offers a lot more growth, has a considerably longer dividend growth history, as well as a dividend payment history. So I'm stoked to be in Snap-on. And with that said, guys, now let's switch gears and get into the weekly portfolio update. All right, my friends, so we are over here taking a look at my dividend portfolio here on Google Sheets. And if you guys want to grab this spreadsheet for yourselves, the link to it is in the description. It's totally free. You just need to click the link. It'll open up a templated version of this spreadsheet, and then you click File, make a copy, make the copy, and then you can start inputting your own data and stuff like that. Very cool. Hopefully very easy to use, but definitely check it out. Anyway, getting into my portfolio in the last week, guys, the current market value is $33,764.84, which, as you can see, is a little bit less than where it was last week. When we filmed this video last week, it was about $34,300, and we are now, what is that, about $700 less than that. There were a lot of stocks that came down in price this last week, which is totally fine by me. I love to see some more discounts. And as far as unrealized gains, guys, we took quite a bit of a hit there too. I think we're down about 2.3, maybe 2.4% in the last week. And I've even heard some whisperings about us being in like correction territory. I don't know how much truth there is to that, guys, but we'll see how things play out in the next week and the next couple weeks. I'll be very curious to see how stocks progress. Now, switching gears, I want to talk to you guys about my recent purchases because, like I said in the intro to this video, I didn't use all of my Campbell's Soup proceeds to just buy Snap-on. I also invested into some of the stocks that are already in my portfolio. And as you can see on the screen, we're going to break all of them down right now. I bought into a good handful of stocks, guys. So in addition to spending about $1,000 on Snap-on, I also picked up about $300 worth of Starbucks, which got me very close to 3 shares. Starbucks has really come down in share price. That's why I picked some more up. I invested another $100 into Altria Group and bought over 2 shares there. I put another $100 into ORCC, which is a company I haven't really contributed any money to in a long time, and I bought 7 shares with that. I also put $200 into Verizon, and that got me about 3.8 shares. And then I put $185 into Procter & Gamble, which I know is really not at a discount, but I had some extra money, and I've been wanting to buy some more Procter & Gamble, and that got me 1.17 shares, so really not too much PG, which all in all, guys, that brings my purchases for the week to just under $1,900. And as far as next week goes, guys, I definitely want to pick up some Starbucks right here. Like I said, I'm officially in the red on Starbucks. I'm down almost 1% in my position, so I probably will be able to get this to 20 shares or so before it goes back up. That'd be a nice little milestone. I'm also going to be contributing $50 to Snap-on. Definitely going to be building out my position with this company a little bit more, and then I'm also probably going to buy some more AT&T, which kind of begs the question, Ryan, no more Lockheed Martin, no more Intel? What's going on there? Lockheed Martin, I'll probably actually hold off on buying buying that for a little while. I've definitely built a solid position in that so far. I'm at about 3.5 shares. And then Intel, guys, I'll probably be buying some more Intel here pretty soon. But I definitely want to buy Starbucks while it's down. I definitely want to buy Snap-on because it's just the new position in my portfolio. And then I want to buy AT&T because I want to get to 100 even shares. So I'm probably will buy AT&T for another like 2 weeks, and I should be at 100 shares. And with that said, guys, that pretty much wraps it up for today's video, but I'm very excited to finally reveal this new position in my portfolio. I've been sitting on it for a handful of days now, and it's been tough not to talk about it, especially in the Discord, which reminds me, if you have not joined the Discord yet, please do so. The link to join is in the description of this video. Would love to have each and every one of you guys be a part of that community. I think we're up to about 350 members right now, and it's awesome. It's so awesome to see what's going on in the Discord, guys. There are so many good conversations about dividend stocks and investing in general going on right now. At any rate, guys, definitely join the Discord, and if you have not done so already, please don't forget to leave a like, leave a thumbs up on this video before clicking on to the next one. And if you're not sick of me quite yet, please subscribe to the channel. I would love to have each and every one of you along for my dividend investing journey. And with that said, guys, that wraps it up for today's video. But thank you once again so much for watching. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.